Small businesses in Yorkshire are struggling to secure loans from traditional banks. Just 1 in 3 companies which applied for one was successful. That's far lower than the national average.
And it has a knock-on effect, as it means that many of these businesses are prevented from expanding, and that means they're not creating jobs either. Here's our business correspondent, Danny Hewson.
Thank you, Nicola. Yes, those figures are pretty worrying. In Yorkshire, only 29% of small businesses which approached their bank for a loan were approved. That's significantly below the national average of 45% of approved loans and less than half of the 62% of loans approved in the North East.
It's a figure that's all too close to home for Viv Parry. Her Leeds-based cake business has been up and running for 10 years. It's attracting new clients, and she wanted to buy equipment to expand, but was turned down by her bank.
From where I was looking, I didn't really understand why the bank couldn't support us as we tried to grow, because I think businesses now need all the help they can possibly have, particularly in terms of finance.
And as the figures show, she's not the only one needing help.
It follows what we've been saying all along, that the banks aren't lending to businesses, but it's more stark is the fact that they're not lending to businesses in Yorkshire, and that's really worrying for us and our members.
So Viv turned to alternative means, a phenomena called crowdfunding.
So how does it work? Well, instead of going to a bank, the business approaches a new kind of lender, which goes to a number of private investors which make an offer to stump up their own cash at their own rates of interest. But is it safe?
To answer that question, we came to the Leeds-based the Rebuilding Society, which has already helped 8 businesses, raising over £300,000 in under a year.
As with any lending arrangement, there is the risk that a borrower falls into arrears or defaults, so lenders are encouraged to spread their risk across multiple businesses and to also really bid at a rate that is commensurate with the risk that they feel they're taking.
So if a bank has turned down a business for a loan, why can you then take on those risks?
If a bank has rejected a company, it's not necessarily because it's a bad company or the company is going to struggle to make the repayments. There are all kinds of reasons. People believe that businesses need to be supported, the economy needs to grow.
I think this is one of the most innovative things I've ever heard of, and it's perfect for the climate that we're in, because we need to start doing new and innovative things if we're ever going to get out of this.
And crowdfunding isn't only an option for businesses. People like you and me can also use it to buy things like cars or fund weddings. But as with any finance deal, do make sure you check the small print before you sign up so you don't fall foul of any cowboys.
Thank you, Danny. Well, Rob Warlow is a business loan and personal finance expert, and he joins us now from our Cardiff studio. Rob, what's the problem in Yorkshire? Why is it so difficult to get access to loans?
I think it's a problem across all of the UK, but particularly in rural and developing areas, it can be a problem, especially when banks don't get businesses. And so it's not a problem that is insurmountable. It's just a case of now going out there, as you say, and looking for those alternative sources of finance.
Have you any thoughts then on why it's worse in Yorkshire than the rest of the country?
At the end of the day, it's all down to particular sectors, so banks may not be willing to lend to certain sectors. It's also down to general economic performance as well. As the guy from Rebuilding Society said, it's just a case of a whole host of factors coming into play.
We've heard a little bit about how this crowdfunding works. What are the pitfalls?
Well, from a borrower's point of view, there are very few pitfalls, to be honest. It's like any traditional bank loan. You've got to make sure that you keep the repayments up, otherwise you'll end up with a default on your credit file. But from an individual's perspective, who is actually lending their own money, then they've got to be wary that, bear in mind, this is not a savings account. They're actually putting their money in the trust of the business owner and therefore taking a risk. So you have got the pitfall that potentially you could lose your money.
So you've said it sounds like quite a good way actually to give something back to the community if you do have money sitting in the bank. You're not worried at all then about the risk for those contributing to the loans?
No, at the end of the day, we all take risks in everything that we do. The people who are lending money to businesses through crowdfunding sites recognise the risk that they're taking. They're looking at the fact that, do you know what, I'm not earning an awful lot of interest on my bank deposit account, so let me go and do something a bit more exciting with it. I'll go and lend it to business owners. And that's where the crowdfunding sites have popped up in order to fill that gap. They bring investors and borrowers together, two willing parties, and everyone wins at the end of the day.
Rob Warlow, thank you very much this evening.